Soybeans and bean meal led the way to the upside. Corn followed, but didn't want to get too far from unchanged. Wheat futures turned down and stayed down throughout the session. The live cattle market led the price advance and pulled feeders to the upside. Lean hog futures gave up mid-morning gains to close steady to lower.
Live from the squared blue line of the future via Farm Journal Studios, this is AgriTalk. This afternoon, we'll chat with Ben Rand from Blue Line Futures. Directly following the news, Oliver Sloup, also of Blue Line Futures. I'm handsome newsman Davis Michelson. Now, here's the host of AgriTalk, Chip Flory.
You know, I don't always pay attention to those kinds of details when I'm booking guests for the afternoon show. Yeah,
Evidently.
Is that too much Blue Line? I don't know.
I tend to respond to the color blue.
Okay.
So maybe it'll be all right. Yeah, I think it'll be great, actually.
I think
Continuity.
we'll be just fine. I mean, it's Oliver and Ben. How can we overdo it with Oliver and Ben?
No.
I think we'll
my only
fine.
fear is that we may be underdoing it, in this show.
That's
are we
exactly right.
That's it.
That is exactly right. Welcome to AgriTalk. I'm Chip. Glad you're with us. It's Thursday afternoon, dude. It kind of snuck up on me.
Did it?
Yeah.
Uh-huh.
Yeah.
I've been anxiously awaiting Thursday afternoon all week.
Well, I wonder why.
3 or 4 weeks now.
Yeah. I wonder why. Yeah. Davis might be going to have a couple of days out of the studio coming up here. And I don't just mean the weekend. I don't just mean the weekend. So
taking a couple extra days, too. Mm-hmm.
Beautiful. Okay. So Ben Rand is coming up. We're going to talk about risk management with Ben and some of the insurance issues and price management issues that he's been dealing with. And he's out in an area in Nebraska that has had to deal with some weather on the crops. We'll see what's going on around Bend out there, okay? We got a lot of news to get to. Let's go ahead and get started.
Yeah. Export sales of wheat in the weekend of July 18 totaled 309,000 metric tons. That was at the low end of trade expectations. Traders' focus remains on the supply side of the market and the Wheat Quality Council's annual hard red spring wheat tour through North Dakota. Scouts on day 2 of the tour found average yield potential nearly 14 bushels above the 5-year average. September spring wheat futures closed lower for a third consecutive session and is set to test support at $6. December soft red winter wheat futures posted a high range open and a low range close, but did respect support at yesterday's low. December HRW wheat futures 5 3/4 cents lower at $5.78. December SRW wheat down 8 1/2 cents to $5.62.5. September spring wheat closed at $6.03 3/4, down 7 cents. Chip.
Yeah, the average yield they found on day 2 of the HRS tour was like 53.7 bushels per acre, and the 5-year average is 40. Yeah, they found a good crop.
Well, the forecast for warmer and drier conditions in the western Corn Belt limited selling in corn futures. Traders do not see a threat to yield potential, but are respecting the potential for a change in the weather pattern that could bring some late-season stress to the corn crop in the western belt. Old crop export sales of corn week ended July 18 were in line with trade expectations, just over 331,000 metric tons. New crop corn sales of 745,000 metric tons topped trade expectations and helped corn post modest gains today. December corn posted an inside trading day with a low range open and a mid-range close. September corn futures 2 1/4 cents higher at $4.06. December corn up 2 3/4 cents to $4.20 3/4. March corn futures closed at $4.35 1/4. That's up 3 cents today, Chip.
Yeah, I don't know why, but corn, 4 consecutive higher closes, and I'm not that impressed by it. And that bothers me. I'll ask Oliver about it here in just a moment.
It might be the degree that bothers you, just a little sneaky steps.
Yep.
Old crop soybean export sales, nearly 89,000 metric tons, were below trade expectations, while new crop sales of nearly 830,000 metric tons were at the high end of trade guesses. That helped support bean prices, as did the advance in soybean meal prices. Old crop meal sales were in line with trade expectations, but new crop meal sales of nearly 521,000 metric tons easily topped trade expectations. USDA this morning also announced the sale of 264,000 metric tons of new crop U.S. beans. The solid demand helped November beans post a high-range close, although prices stopped short of a full test of resistance at Tuesday's high. That's at 10.86 3/4. August beans today a nickel higher 11.16. September up 14 1/4 to 10.74 1/2. November beans closed at 10.79 1/2. That's up 15 1/2 cents.
Yeah, volatility is definitely coming back into the beans. We're getting some wider price swings, and that might up the odds of an extended recovery.
Yep. Well, old crop cotton export sales of 74,000 running bales were disappointing, but new crop sales 286,000 bales helped support cotton prices. December cotton today 25 points higher at 68.90. On your livestocks, beef export sales of 13,400 metric tons were in line with the 4-week average pace, and morning boxed beef trade was solid again today to help send live cattle futures sharply higher. August live cattle opened steady and rallied to close near session highs and at the highest level, since September 28 of last year, Chip. August live cattle today $2 higher, 188.90. The October contract up 232 1/2 to 188.60. August feeder futures $1.50 higher, 258.62 1/2. And on the snout side, August hogs opened higher, fell to test support at yesterday's low, and then recovered to close just below the opening range. August hogs today steady, 93.77 1/2, Chip.
Yeah, the export sales tally on pork, 30,200 metric tons. That was off 19% from the 4-week average. Thank you very much, Davis. Let's bring in Oliver Sloup, Blue Line Futures. How you doing, Oliver?
I'm doing well, Chip. I've got my countdown going. 29 days until college football, so I'm gearing up. I know it's a little early to get too excited, but I know you're on the same bandwagon I am.
It isn't. It's not early at all. We can get as excited about it as we want to, and I'm right there with you. So, okay, I said it earlier. Corn closed higher 4 days in a row, and I'm not excited about it. I'm not that impressed. What am I missing?
Yeah, I mean, we're just narrowly taking out the previous day's highs in each of the last 3 sessions and just, approaching some overhead resistance from 425 3/4 to 426 1/4, which were the highs following that June 28th quarterly report. So we saw those highs on July 2nd and July 5th. We need to get out above there, I think, to maybe spark something a little bit more exciting. Maybe retrace that breakdown point from that June 28th report. But yeah, okay. All in all, not a whole lot to get super excited about. But on the same token, I don't know that there's anything to get overly pessimistic about either right here, right now. I think we probably settle into a little bit of a range. I still think we can work a little bit higher, but again, I'm not holding my breath for anything too exciting.
All right. Very good. Cattle, back to the highs that we saw last September. That's an impressive move.
It has been very impressive. It looked like we were kind of a stick in the mud for, better part of last month and a half, not really going anywhere. And you were like, all right, is this cash market and board going to come together? And it looks like we're finally getting some movement there with August approaching first notice day in about a week and a half. So certainly encouraging to see this higher price action. But once we turn the calendar over into August, historically, it's tough to really see a sustainable rally. So we're looking at ways to protect the downside for a lot of guys on these rallies.
Okay. All right. Well, that's what we're going to talk about with Ben Rand coming up here next, man. So
I got my notebook out. I'm taking notes.
We'll get into it. Oliver, thanks, man. I appreciate you.
Take care.
All right. Ben Rand, Blue Line Futures coming up next here on AgriTalk.
On your favorite radio station or your preferred digital device, AgriTalk is live every weekday. Don't let me talk. Hurry, Chip, hurry.
Welcome back to AgriTalk. I'm your host, Chip Flory. Do not let Davis talk.
No, don't.
No. Zero.
Later.
Do not.
Now. Let me reset.
No. Ben Rand, Blue Line Futures, is our guest analyst today. Let's get him in here. Ben, it's good to talk to you. How are you?
Oh, I am pretty decent. I am sweating. It's a little warm out here in the Western Corn Belt today, and got another 7 to 10 days. It looks like pretty good heat coming in. But, gosh, I'm just really excited for the corn that hasn't been hailed out. It's absolutely phenomenal here in Nebraska. And in Western Kansas, especially stuff that, under irrigation, dry land, a little struggling. But like Oliver said, 29 days and counting on college football. Pretty excited about that, as I am the only guy in Nebraska that flies black and gold Iowa colors.
Oh,
So
dude, I'm
I say that.
sorry.
I am not sorry at all. I am a true Iowa fan. My wife's family and was all from Iowa, and we got ground over there still. So very, very proud to be a Hawkeye fan here in Nebraska, surrounded by the Crimson.
Well, thanks, Ben. It's been fun talking with you. No, I'm just kidding. Of course. Of course. My daughter-in-law is a huge Iowa fan. I've got a mixed family in the family, between the Iowa State and an Iowa State son and an Iowa daughter-in-law. So that's kind of a, the tension gets a little high
house,
on
house
game
divided
day.
Right there.
Yeah, that's right.
I bet so. No, I mean, Iowa is the pinnacle of mediocrity when it comes to football. It's just been so consistent. It's fun to watch. We try to make it every year to the Nebraska Iowa game, whether it's in Nebraska or in Iowa. And it's just a wonderful tradition that, we've done me and my boy have done as a family for quite a few years, and we love doing it. So, and, here at the agency, we're huge supporters of the University of Nebraska and very proud to be affiliated with them. Actually was there last week or the week before, I forget when it was, speaking at the the Nebraska Ag Youth Institute, which is a phenomenal program that they put on for juniors and seniors across the state. So very proud of both universities, their role in agriculture, and proud to be affiliated with both of them.
Yeah. Hey, when I saw that on Twitter or on X that you were there at the Ag Youth Institute. Tell me a little bit more about that. What are they learning at this institute?
Well, it's a week-long thing. It's a week-long institute there at the university in Lincoln for juniors and seniors from Nebraska, and they have to apply. They've got to be accepted this year. Once again, set records. I want to say there was something like 250 or 275 delegates from all over the state that converge into Lincoln. And every day they get exposed to different things within agriculture, from, national corn growers, Nebraska corn growers, national beef, Nebraska beef. We here at the home agency are very proud to be a big sponsor of that program. We feel like it's great for our kids and our youth coming up to understand that there's a lot more to ag than just a tractor cab. And I was trying to put in perspective for some of those kids, the amount of people it takes. We specifically addressed these hail claims and these hail events that we've had in Western Nebraska. And the sheer number of people it takes to process one of those is kind of staggering. You have an agent, you have a farmer, producer, you've got an adjuster, you've got a claims manager, you've got a claims processor. And we just want kids to know that there's more to ag, I guess, than just having to look inside your own fence line. There's a lot of stuff out there. And so that's really what my focus was. And then Governor Pillen was on before me, and he was, puts out a great message to our youth about the importance of ag. And no, it's a wonderful program for the juniors and seniors of Nebraska. And if somebody's interested in applying next year, find me on Twitter, and I'll be happy to put you in touch with the right folks. But we are very proud to be a part of that program, and we have been for years, and we'll continue to be.
Cool. That is awesome. That sounds like a really, really good program. You've mentioned them a couple of times, the hail claims that are happening out there, Western Nebraska and Kansas. We've heard reports, but it's hard. Is it still hard to quantify, or are there any numbers that we can put on just how much damage has been done, Ben?
Well, so I track these things pretty close. And the reason that this hail thing is so important to us is hail rates in this part of the world are exceptionally high. When you're looking in Western Kansas, Eastern Colorado, Southwest Nebraska, and you're going to buy a really pretty good hail and wind policy, you're talking about per acre, you buy it per 100 per acre. You're going to be somewhere in the $46 to $49 per $100 of coverage. Yeah, so this is not a decision that you can take lightly. There's substantial financial impact on this, right?
Yeah.
Even if you're only going to put $200 of hail on, you're talking about, potentially spending up to $95 or $100 an acre additional input cost in a year that's very frustrating to just watch these markets grind lower. Obviously with the exception of the last week where corn has given us a little bit of a breather, I guess, on a recovery, but it's very difficult to do for the unhedged or unprotected producer to want to spend that kind of money. So hail is important to me. To put it in perspective, size wise, so we get maps from our carriers that kind of show where the hail was, and you can pull it off National Weather Service and stuff. And I lay them over top of some mapping software that I got. And there were two major events here that everybody's talking about. And they really ran along the interstate, started in a town called Gothenburg, is first town east of North Platte. And went from Gothenburg all the way down I-80, crossed I-80, and then went to Lexington, Nebraska, which is kind of where I live. And then exactly 1 week later, almost to the hour, a second one did the exact same path, except it did not stop in Lexington. It went all the way to Fillmore County, which is another 80 to 100 miles east of me. And that was between 4 and 20 miles wide, call it 150 miles long. Now, so when I lay that over top of my mapping software, you're talking somewhere in the neighborhood of 525 to 600,000 acres. It's not marginal. Now, does that make a difference in the market? I'm going to argue that it doesn't. We get hail in Nebraska every year.
Sure.
It's not new. It's just not new. It is unreal to see this many acres at one shot be all wrecked at the same time. And just be able to get on Highway 34 in Holdridge and drive west for an hour and see nothing but wrecked corn. I mean, it's kind of unfathomable, but the reality is that's farming here in the Western Corn Belt.
Yep.
And I'm not trying to downplay it, but I don't see it as a market mover, I guess. It stinks to have to drive through it every day and see it all beat up and dead.
Literally.
Yeah, but that's what's going on. I would say, if you're going to call it an area, 525 to 600,000 acres in those two big hailstorms that everybody's talking about. And that's just for me mapping it in some software.
Wow. I agree with you. As far as the futures market trying to factor that in, I don't see that happening. But it's going to be a cash market factor for you out there. I mean, there's no question. Nebraska's had pockets of areas that have been short on corn the last 3 years in a row, and there's going to be another one this year.
Oh, absolutely. You've hit the nail on the head. The futures market's an international game. The basis is going to solve those local supply and demand problems, and there are going to be local supply and demand problems. You got some major ethanol plants along I-80 there, Kappa and Wood River, and that sit right in the middle of where that corn was destroyed. And then you got some really kind of unusual stuff too. You got Frito-Lay in Gothenburg. There's a bunch of very specialty corn that go into Frito-Lay, and that's something to take into consideration. And those originators are probably going to have to do some problem solving to figure that problem out. Because I'm here to tell you, it literally looked like somebody took a sledgehammer from the tassel and just smashed the corn stalk straight down 2 feet. I mean, it was just unbelievable amount of damage. Yeah. And just stripped up and that's all, as an agent, I'm a crop insurance agent too, for those who didn't know. That's actually my primary thing, what I do most of the time. And the Blue Line thing helps me out making better decisions and risk management. But we work all those claims as an agent with our producers, and we're out there in the field working these things. And I'm telling you, it's heartbreaking. It is absolutely heartbreaking not knowing what to do with that. So it's been a deal. It's been a lot of looking at wrecked corn for the last 2 weeks.
Boy, there's more fun things to do, that's for sure. But it's that kind of perspective that we just got, Ben, is very important for us to gain a better understanding of what is the potential in this market. And one of the reasons that I say that is the last few years we have set up this corn market to deliver better than expected yields once the combine started to roll, better than expected production potential. For the first time in quite some time, I feel like we're setting up for this crop to deliver and harvest to deliver worse than expected results. I want to talk about that a little bit more when we come back, Ben. And we got to get into the risk management on these cattle, figure out what your thoughts are there. Ben Rand, Blue Line Futures, the home agency here on AgriTalk.
Let's go to the markets page at profarmer.com and check today's closes, where December HRW wheat futures were 5 3/4 cents lower at 5.78. December SRW wheat down 8 1/2 cents to 5.62 1/2. September corn futures were 2 1/4 cents higher at 4.06. December corn up 2 3/4 cents to 4.20 3/4. August soybeans a nickel higher on the day at 11.16. November beans closed at 10.79 1/2. That's up 15 1/2 cents. December cotton today 25 points higher at 68.90. On your livestock's August fats today $2 higher, 188.90. August feeders $1.50 higher, 258.62 1/2. And August lean hog futures today unchanged at 93.77 1/2. Get more market news every market day. Just visit tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. When news breaks, the news makers talk about it on AgriTalk with Chip Flory.
Welcome back to AgriTalk. We're in the middle of a conversation with Ben Rand, Blue Line Futures and the Home Agency out in Nebraska. Ben, we've generated some conversation out there. Roger thinks we're crazy and that 600,000 acres of damaged corn should be a market factor. He's not going to argue with us, though, at this point. Tim wants to know what the range of damage on those acres up to 600,000 might be. So,
I would say, go ahead. I'm sorry, I interrupted you there.
No, I shouldn't have. I was just going to say, what are you talking about? 10%, 90%, 100% damage? What
I
is
would say, when I say damaged acres, I mean that it was affected by hail and it's going to result in some sort of a yield drag. I'm not saying that there's 600,000 acres. That is a total zero. Because really, if you look at this, the area that will likely get zeroed out or have zero production assigned to it is very narrow, 4 to 7 miles. But when you look at it holistically from a north edge to a south edge of where that hail path went, you were 18 miles wide at some parts, and it was very, very, very long. And so that includes what I would consider any area that would have been affected by hail. That is not a total loss. That would definitely be anything from call it a 10% loss to a total.
Right. Gotcha. Okay. All right. What do you make of this cattle trade right now, Ben? What are guys talking about?
Well, the cash up here in the north is the hot topic, right? Both in the feeders and the live. We had some 308 to 310 in the meat bids today up here in the north. That's like a 197 equivalent. I saw on Twitter earlier today there was a 190 bid down in Texas. So Ollie really hit it on the head earlier. We got to have some convergence, right? We're getting ready to go into August here and August trading whatever. But I forgot what it was. I was looking earlier. Let me pull up my chart here real quick.
188.90 on the August.
186.90. 188.90. Yeah.
Yep.
So we got a little bit more work to do to the upside here. But once we get past this and we get into August, I think producers really need to not be lulled into a 30-day chart. We need to look at a 3-year chart on cattle and just take a breather and remind ourselves what can happen. Because if you go back and you look at September of last year, September 15th or 16th, whenever it was, to call it, I want to say it was December 9th or 10th, somewhere in there. We lost like $28 on the fat cattle board. And that is a very real risk for a lot of these guys, especially when you look at the numbers some of these feeder cattle are bringing. I was watching some sales up in South Dakota yesterday. 245 10 weights, 247 10 weights. Man, unless you have like a 60-cent cost of gain, it's pretty hard to make some of those pencil in my mind. So you got to be real careful, I think, with those things. And I've always been told by a good friend of mine and a cattleman in central Nebraska, the money on the cattle is made on the purchase, not on the sale. And that makes me really nervous considering what we're paying for feeder calves. So protection is prudent is what I'm trying to get at. And I think, if we do see some convergence here going into the August delivery, I think that's normal. You look at seasonality, that tells you that's normal. Feeder calves should peak out typically between the 9th and the 10th of August before they start their retracement, specifically the October board. So yeah, I think take protection, but leave yourself for upside, which means like a put option typically. If you want to buy a put, do a put spread. Those are things that give you that downside protection. And then of course there's LRP. The consideration though with all of these is LRP settles against the cash market. Well, last week we settled at 194, 195, something like that. I have to go back and look on LRP. So it gets really hard to offset that basis, which is what you and I emailed about, right? Like, how do you protect the basis?
Yeah.
Well, it's all about staying current, in my opinion. If you got cattle scheduled to go, you let them go when they need to go. You don't hang on to them. You take advantage of the basis that's here, and let this run its course, because it will not hang around forever. And I know I've hit on this, and I'm going to hit on it again. But we have to be super careful with the April 2025 board. The April 2025 board has not traded below 178. The prior high, like all-time record high, was set on the April 15 board during the cattle run-up. October 20th and 21st of 2014, we traded 172.75 on April 15. Our April 25 board has not traded to below 178. When it breaks below 178, it will break hearts. Because there is some substantial risk there to the downside, and I really want guys to be protected. I don't know that doing it outright futures is maybe not the right thing here, just because we got some convergence going on, but take some protection to protect yourself, and it's really going to have to be done here in probably the next 2 or 3 weeks for these fall cattle.
Wow. Okay. Interesting. I want to drive home the point of how important it is to get some coverage in place. It's just the dollars involved, Ben. Even for a small operation, the dollars involved that you're investing on buying calves, the dollars involved that are walking around out there in the feedlot, you've got to find a way of protecting that. And looking at the put options and looking at the LRP, I think, are two really, really smart things to do right now.
Yeah, I mean, that's a conversation I have. Iowa's got the farmer feeder. I would say if there's a home of a farmer feeder, it's in Iowa. And that farmer feeder, I can't tell you how many times I've had this exact conversation with those guys over there. That they have the exact same mantra. We have more money tied up in the feed yard or in the pen than we've ever had before. And if I'm not careful, I'm giving a quarter back to the bank that I've paid for. And that is so true. If you got 1,000 head out on a yard somewhere or in a pen or whatever, you got 1,000 head. If you paid $247 for those 10 weights, 2,500, throw some freight in there. You better hope you don't have any death loss. It is really, really big money. And I encourage people to find some protection. I like the LRP. I like the put option right here. I think we got to be careful with shorting the nearby months outright futures, just because we got some convergence going on. Beef demand is good. The American consumer wants it. You go to the local store and the beef shelves are empty. I am very happy for the American cattlemen. They deserve a break. They've had some hard years, but it will come to an end. And when it does, it's going to really, really sting. And I really hope people are prepared for it.
Okay, another group that I want to get prepared for it is the cow-calf guy, because the calf hits the ground and it's $700 to $1,000 laying there when that calf. And now that we're into the midsummer months and some of those calves are actually getting a little bit of weight to them, there's a lot of value walking around out there in the pasture. What should those guys be doing to protect the value that they've got?
Well, let's just take a sample here. Let's say you started running a cow-calf operation within the last 10 years. I'm here to tell you the calves that you have on the ground right now are worth more than they've been in the history of you running a cow-calf operation.
Right.
And that, I think, is something we've maybe been a little lulled to sleep with this consolidation in the market. And I'm glad that this our time together today came when it did, because I think it's important for people to look at this from a seasonality perspective. I'm here to tell you the April feeder board. If you don't believe me, follow me on Twitter. I post that stupid October feeder board like once a week. I'm telling you, between the 22nd of July and the 9th of August, over the last 30 years, that's the time to do your hedging for October.
Yep.
For those cattle you have on the ground that you're going to sell in October. That's the time to do it.
Yep.
So I'm really encouraging guys, especially the cow-calf guy, because I promise you, if they have started in the last 10, well, really probably ever, they've got the highest dollar cattle on the ground that they've ever had. And find a broker, find an agent, find somebody that you trust that understands your operation, that can help you put a floor under them, because we do not need some unforeseen event ruining record profits.
Right. That is so.
That's what it boils down to, right? I mean, it's an unforeseen event.
Yes. Yeah. That when it comes to the fundamentals of the market right now, they are so well documented and so unchanging. We know what's going on there. It's going to be an unknown event that pulls the rug out from underneath the market. When it happens, you're going to see another $28 slide in the live market. You're going to see a $50 slide in the feeder futures, Ben. That's what it'll turn into, because your buyers are going to walk away. So
it's getting really hard for somebody. It's getting really hard for some of these smaller feed yards to justify buying these calves. Yeah. You are really laying a lot out on the line, and you're talking about increased credit lines. You're talking about having to borrow to hedge. I mean, there's a lot of money laying out there. Okay,
Ben, just got this text in. Wants to know if the LRP is available on beef on dairy.
Dairy calves are indeed insurable, but you're not going to like the numbers because it's at a 50% rate to the regular beef cattle. So like if you can lock up I'm just throwing hypothetical numbers out there, but if you can lock up a $3 Black Angus, you're only going to be able to lock up a $1.50 dairy calf. They're half the price. I don't have anybody that uses it for beef on dairy. Not saying you can't, but I don't have anybody that uses it that way. That the price structure just isn't as attractive as it is for a beef animal, if that makes sense. A beef breed.
It does make sense, but there might need to be a new offering out there because of the popularity of the beef genetics in the dairy herd. Ben,
and that's an excellent. That is the most excellent point, and I'm glad somebody brought it up besides me. Everybody wants to talk about herd rebuilding, and I agree. There needs to be some herd rebuilding done. I will also tell you, it started in February. It started in earnest then. So wow. I think we're on our way to recovery in the herd, but there's more. Okay. There's always room to improve.
Ben, I love these conversations. Thank you, my friend. We'll talk again soon.
Thank you, sir.
I don't know what you're thinking. So call us at 855-4TALK-AG and tell us what's on your mind. And welcome back to AgriTalk, everyone. Your pal Davis Michelson here for the last time this week, Chip.
Yeah.
As soon as we're done here, my headphones are going to be spinning, bro. I'm going to be on the road so fast. I'm out of here. I've had it. I just...
You're okay. It's fine. It's fine.
I'll be fine.
You sound wonderful.
Though, like, the wife and I... So we haven't been married that long. We're coming up on 2 years here. But the only traveling that we've done is to go do family stuff. That's not a vacation.
No, not really.
I mean, crikey, in some cases, it's not even fun.
Right. I know your family. Yeah. That might be a little exhausting.
Yeah. Don't tell our parents, but we're
I
going
won't. Hey, Ron.
that doesn't include them. Yeah.
Oh, good.
Oliver Sloup is excited about 29 days till college football. I'll tell you what I'm excited about.
Okay.
In 199 days, the Kansas City Chiefs will take the field at the Super Bowl. 199 days till the Super Bowl. Yep.
Oh, my. You've already got that. You've already got that scheduled in.
I'm working on my invitations to send out to my friends, and we'll see. We'll have a nice little party here. 199 days to plan.
Hey. If you were a serious party planner, you would send a save the date card.
Is that what you do?
Yeah.
You save the date.
Yep.
See, this I don't understand, though.
Right.
I mean, why you got to tell them, hey, I'll be sending you an invitation for this date and this time.
Right.
But this isn't the invitation.
But
You're
this
not
isn't
invited
the invitation. Just save the date. Save the date. Yep.
What if I might just send out a whole bunch of save the dates and then not have a party? And then just see what happens.
Oh, that would leave people really, really confused.
I think so.
You know?
No.
Yeah.
No.
Yeah.
Friends are overrated anyway. I don't need them. Yes. Let's get serious now. Ben Rand, Blue Line Futures. Herd rebuilding started in February, Chip. According to Ben Rand. What do you make of that claim?
I'm going to get back with him and see exactly what he meant by that. Because you look at some of the heifer numbers in the cattle on feed report and the feedlot inventory numbers, it's really not showing up. And you look at, now you go all the way back to February, and we had this conversation with Scott Varlick last week, KKV Trading. There was a pop in the feeder heifer sales at the sale barns, where the spread between the heifers and the steers really narrowed up. When that happened, it's a suggestion that, okay, maybe the cow-calf guys are at the sale barn, they're bidding up, and the competition for the heifer, they're adding some competition for the feeder heifers out there, and sometimes that shows up as the herd is rebuilding. Well, there was a pop early this year, and that spread really narrowed up. But you look at it now, and I just don't see it. I don't see any indication in the sale barn receipts out there that the cow-calf guys are in there trying to buy up some of the heifers. I just don't see it.
Ben wanted us to keep an eye on the April 25 fat cattle contract.
I thought that was really interesting.
Up 75 cents on the day today at 190. Hey, there's your 190. At 190.92 and a half. That's a $20 break to get to 170 there, Chip.
Yeah. No kidding. And it's never traded below 178. I think that's what he said.
Okay.
Where is my note? 178. It hasn't traded below 178. So he just basically said when it does, watch out to the downside. Okay. So it's got some cushion in here where it can absorb a setback. It can absorb some hedging without doing terrible technical damage. But you get that close or that trade below 178 in the April 2025 and look out below.
Let's go back to those damaged acres out in Nebraska. He was talking about 500,000 to perhaps as much as 600,000. And if I heard him right, he put the range between about 10% damaged to, it's a range, of course.
Right. It'll be the net on it will be something less than half damaged. Okay, so they're probably looking at over those 600. Call it 600,000 acres. It's probably something in 2/3 of a crop, 2/3 of the bushels.
Mm-hmm. Okay. Because, and you had the number. It was Nebraska planted, what, 10 point something million acres?
10.1 million this year. That is up from 9.95 million last year. The harvested acreage estimate at this point, 9.7 million. That's harvested for grain. Okay, and there's a heck of a lot of corn silage cut out in Nebraska, no doubt.
All right.
So
okay. Well, the trick here. Oh yes, I was going to mention this. He was talking about convergence between cattle futures and cash as well. We talked about that yesterday.
Yeah. I shouldn't say that it's got to happen. It's supposed to happen. We should get convergence in these markets, and when we're talking about a mid 190 cash trade, well, I shouldn't say mid 190, because this market it's going to converge to the southern cash cattle bid. All right. So if it can get into the low 190s in the August contract, because I think that's where we're at, and I don't know if that thing's going to break much down there just because we're getting quality cattle out of the South, and there's plenty of demand. Plenty of demand. No question about it. Okay. National Weather Service 6 to 10 day outlook for July 31st through August 4th. Man, July's almost over. Above normal temperatures expected over the entire Corn Belt, most of the country. The highest odds of above normal temperatures, North Dakota, Red River Valley, most of South Dakota, and the western 3/4 of Nebraska and western half of Kansas. Then on the precip side, below normal precipitation is expected Minnesota, western Iowa, northwest Missouri, and points to the west, near normal to above normal in the central and eastern Corn Belt. Thank you so much for listening today. Come back tomorrow morning. We've got the free-for-all featuring Tyne Morgan.